Okay, so I wanted to take a moment to discuss a few things. I know we're having some, sorry, I know we're having some questions on this new core trade, which is going into earnings. I'm well aware of that. First of all, if you take a look at STLD reported earnings, and it's acting pretty good after earnings. And I'm actually thinking of going into earnings with Nucor. So I'm trying to get at a profit right away. So I'm hoping that I can get out of the gate here. If I could get at even a couple percent, 3% profit, I'll probably go into earnings with a small position. I think Nucor was the leader in the group, and I like the way the STLD is acting. It's a pretty aggressive maneuver, I guess, but I'm trading it from this low cheat here, and good chance it comes up to the 50-day. This probably going to need more work. Maybe it comes up to the 50-day and rallies up on earnings, and at that point, it might be a good short-term trade. And then it needs to build another pivot, maybe a cheat area, or runs up and builds a handle. So I'm trying. I'm really just pulling every trick in the book at this point to get some trades on here. But it's coming off of a nice little pivot. Certainly from a day trading standpoint, this is perfectly fine. This is how I've been trading for quite a while here with these trades. If they work out intraday, great. If they really run up, I can take some profits off if I have a real big position and then hold overnight. So that's another thing. If you go in here and you can get a little profit here today, you can sell some off and then finance that risk. Maybe you have to sell 90% of it off to finance the risk, and you only go in with 10%, but you can still hold overnight. And it's good even just to practice, even if you just take a small position and then you sell off 90% of it and you go in, the next day with a very tiny position. It's a good way to practice with real money for those of you that are just, starting here. Mark, what are you doing? You doing anything today as far as trading? I'm going to go over a number of the trades today and some things that I'm noticing. Are you doing anything?
Not a ton. I'm, watching a couple things similar to you with the new core. This OLN's got earnings. I have a position. I'm kind of in the same mode. I don't want to take too much headline risk. So without a cushion, I'm going to be trimming everything. This one I have a little bit of a cushion right now, but I don't know enough to hold a full position, say. So, given the environment we've been in, it's just kind of, if normal plays aren't working, holding full positions into earnings probably not the best, but
Yeah.
not the best plan
Well,
without a cushion.
big positions without a cushion certainly is quite risky, and also depending on where you are with your own portfolio. I mean, if you've been doing great, you got a bunch of profits to work with, and you want to roll the dice a bit, well, that's fine. But again, if you're not doing well, and certainly if you're underwater, then you've got to really be careful. And I wouldn't hold them to earnings at all. So it really, it has to be individualized and based on what kind of traction you're getting in your own trading. But so we had the breakout here, or the attempt to break out with a light squat here on the OLN, and now we're trying to get a reversal recovery. Pretty large base here, coming out of a nice base. And I mean, this is this rotation where 1 minute it's growth, and it's cyclicals, and it's back to growth, and it's cyclicals, and oils have been doing well. There are a bunch of oil names that have run up that I have not participated in. I've been staying away from them. It's been a little tricky in the way we've rotated so fiercely back and forth. So, but that's one of the few areas. There's not a whole lot of areas that are doing great. Of course, crypto is coming back and ripping back here. We just came out of, Mark and I were just talking about Ethereum, where you're coming out of a big VCP and breaking out here on a gap, of course, on this ETF. Already, Bitcoin has been running up the right side here for a while. Also came out of a good sized base. No real pivot on the right side. I'm not showing you the actual underlying cash index, but really acting great. And then coin, of course, I actually own some Bitcoin and some coin, but in a very, very small amount that I have. Oh, thanks. I said, here's my morning oatmeal just arrived. All right, so let's see here. What else? So I did a trade this morning. Well, I'm in a trade, I should say. I bought MGM back right off the low, and basically I just, sometimes I'll do this where you when you have a nice big breakout, I'll buy it as it retraces about half and undercuts a previous low. It's such a low risk trade. My stop is literally like I think it's 11 cents off. I guess it started to turn up off the lows. Where's an intraday? Probably showed on there a little better. Yeah, if you can see right here, it pulled back. I wasn't really looking at the intraday. I was just looking at how it was trading, and then when it started to turn back up, this is what they call a ticker sense. I used to, when I first started trading, all we were watching was just bid and ask blinking on a green screen. So you got really good at just watching the tape and getting a feel for when it's turning up or down. So I wanted to be in this name. Of course, yesterday, bought this stock, and now it pulled back here. I just tried to get right back on board on this little tiny, and I have a very small position also. I should point that out, little tiny position. So if it can close up today here, that would be great. And then I would look to maybe start looking for a pullback buy and to build back into it. Again, this is where, you don't always just walk away from a trade because it stopped you out. This is one that had a big breakout. It certainly extended. I was trying to buy it in case it got away from me and started taking off here because this is just such an exceptional breakout. but I'm keeping it on a tight leash. Why am I having those little tiny stops? Because I want to be able to give myself multiple tries. I want to be able to, if I get it wrong, I want to be able to try 2, 3 times and get on this with a stop that the total of those maybe 2 or 3 stops would only be one stop, if you will. Now you can say, well, why not just put a bigger stop? You can do that too. You can certainly do that too. But from a risk standpoint, I might get it right the first time with the small stop, right? So if you have the big stop, well, then of course, you're definitely giving it that amount. But if I put the small stop, well, I might get it right the first time, and then I don't have that risk. So that's sort of the rationale behind that. Let's see. So AXP. I have some AXP. I bought some AXP here. The Dow is is flirting with new highs here, and this is a pretty solid base. So a lot of these stocks are going into earnings. That's the only problem. I'm also picking some stocks. If I'm going around earnings or going into earnings, I'm trying to pick some names that historically they haven't really reacted very big to earnings. You haven't seen big volatility around earnings, and this is one that probably is not going to have a huge reaction to earnings. Hopefully, if you're long it going into it, it won't. But I'm still seeing, look, even in the energy area, like I did, we're in this DEN, but even here in a group that's really hot, came out a couple of days ago, and then the very next day, boom, right in, still having trouble not getting that follow through. So even though you can go back and you can Monday morning quarterback and you can go and say, oh, well, look at this one and this one and this one that took off. Yes, but how often is that happening? Is it the norm, or is it an aberration? Is it are they coming from low risk entry points where you can get in at a good buy point, or is it just random? And to me, it looks very random. I'm just not finding the entry points where it's working out. The stocks are working out really well from the breakouts to really take too much risk and to start going for those swing moves just yet, unless with just very small positions and trying to finance those stops with with intraday profits if you can get them. Let's see, any names that you're focusing on? I know GT was one.
Yeah, I like PSTG as well. This is one I'm actually hoping it tightens up more. I just like that reversal yesterday on big volume. It just tells me, if you look at the volume profile, it looks like there's an institution or in there or two just taking a position.
Yeah, it pulled back and then had a good close, and the volume was up. So that was certainly some support here. I like to see it. Hopefully, if we can go inside for a day, that would be really good. Even go a couple of days here and then come out. Not my favorite, but I don't really have a whole lot of too many of them that I'm completely have conviction in that look so great as far as their charts are concerned. Some of them look pretty good, but they're really big cap, like COF. Here's a perfect example of a name that tried before, got stopped, and was on my list. But yeah, this is where I keep a list. I always keep a list of the stocks that I sold and I got stopped out of, and the stocks that I sold at a profit. I keep two separate lists: stocks that I got stopped out of, and stocks that I took a profit on. And I always circle back to them every day. I look at that list and I take a look at the names and see if the ones I got stopped out of, if the fundamentals are still there, the story's still there, and they're resetting. They might reset technically. So as a matter of fact, it might improve. This uh, a name here over here, this is really getting a pretty nice base here, but it could even improve. Maybe earnings came out in the interim and it was a great earnings report, and it's actually, the story's improved and the chart is holding up, and now it resets. So I always try to keep an eye on the stocks that I previously sold and got stopped. Now the ones that I sold into a profit, a lot of times, I mean, Upstart's a perfect example of, here's, this could be a monster from a power play. Now, sold it into strength, but whether you sold it all or you sold a piece of it, let's just say you sold it all. So now it's off your radar. So because, it's extended, but I would keep an eye on it, because now on a pullback, I may be looking to add back on a pullback buy. So again, I try to keep focused on those stocks too. Schwab's acting pretty good. This is actually a nice breakout. It came out on earnings one day, a little pause back here into new high ground. Yeah, good breakout so far. Would really like to see this go into new highs today and have another day and get 4 out of 5 or so days up here, and with some good closes. That's a good sign. Let's see what else. LORL, I've been watching. This is trying to form this right side. Sorry about that. My phone's ringing. This is trying to form this right side. And I like the way it's shaping up, the way it's just drifting back here. And now, if we can go inside maybe tomorrow, we might get a pullback buy, and you can start buying it as it gets through today's high. We'll see. We have to see, of course, what happens today. That's still, the jury's still out. But again, just taking a look at this, why is this? Sorry about that. I'm having an issue with there you go. Oh, all right. Trying to zoom. Yeah. So this is a big base, nice big base, a lot of tightening, and you're really starting to get tight on this right side. I really like the way this is shaping up here. And if you draw a line across here from the pivot, let's just draw it right. Whoops. Come on, will you? This is what happens with Zoom. Of course, there's never any technical problems when you're on Zoom, right? Let's see here. So there you go. So you draw a line here. See what's happening here. If you come out of this pivot now, where it's quieted down, it's going to take out all your supply, and any supply that's there, any trading above that level is way back here. And it was only above that level for, I don't know, 5 or 6 days. Right. So this is why I'm really focused on this, because this is a big base with a lot of tightening. Look at the volumes coming way down here. So that's telling you that supply has stopped coming to market. Now, I don't know what's going to happen with this. Maybe it works out, maybe it doesn't. But again, here we go again. But what I can tell you is that it certainly has the footprints of supply diminishing here, and that means that it has the potential to explode, and especially if you have a big base. And then you see here, it ran up nice right here. You had that demand that came off the low, so that shows there was some little bit of volume there. You may have some institutions coming in here. So if the demand is there, and the supply is really come down, it can be very explosive. So I wouldn't buy it here. At the very earliest, I would wait to see if it can go inside tomorrow, and then turn up from a pullback buy and maybe start it there. And then if it can get through these highs, then add to the position. That's sort of how I would, I would trade that. So that's one that I'm watching pretty carefully here. AIG was simply, again, this is another situation where I, you're keeping it on a short leash to be able to have a few tries. And the reason is because this was a little erratic. It's holding up nice. It's a pretty big base, but the way I played it was, a little bit funky in the first place. So I got knocked out of it, but I came back into it. And that's what I'll do very often. I'll go into a name with a very small stop, and then if I get stopped out, I'll try it again, and then if it improves, I might even widen the stop later on. Again, so again, it's really based on the quality of the base and the quality of the pivot point and the volatility of the stock, and there's definitely some feel there. I know you guys want mathematical answers and know exactly how I arrive at these decisions, but these decisions, are not always right. That's for sure. It's just a matter of a balancing act of balancing the risk to the reward and doing it in a manner that makes sense to me, where I'm jockeying for position, and I'm not risking too much. It's all based on risk. Let's see. Actually, I should get to some questions. I did promise you guys I would take some questions. Let me see here. I'm trying to get to where is the box? Okay, here's the box. I don't usually run this. Bob does, so I don't even know what the chat box is. Let's see. Okay, so what periodicity? I don't even know what that word is. Do you use for average volume, 10-day or 3-month? Well, for average volume, we use a 50-day. We use a 50-day average. That's what's down here. That's the average volume is a 50-day. How much time do you spend on post-trade analysis per trade? Are there certain questions you ask yourself when you learn what you are trying to learn? For a new trader learning your VCP strategy, what questions do you recommend we ask ourselves during post-trade analysis? Well, the very first thing that you should ask is, did you stick to your plan? Did you have a plan, and did you stick to your plan? That's actually more important than having a good plan. That's actually more important than making the right decision or making profits. Did you have a plan, and did you stick with your plan? That's the first question you have to ask. And the answer should be yes. And then you can take a look and see if that plan worked or not, and then you start asking the questions: why? What was wrong with that plan? Where did I go wrong? What did I not see? What should I have been seeing? And then you sort of back into the result. I mean, that's really the starting point. Let's see. The Ether weekly chart looks like a giant VCP. Do you think that it looks too extended on either the weekly or the daily? Well, it did gap here, at least on that ETF chart, and it is a little bit extended, but yes, it's coming out of a big VCP. Mark, you're in the Ethereum, right?
Yeah, I'm actually quite constructive on ETH. It's just the problem, guys, is this ETF is just not a good. It's not a very good vehicle, in terms of, if you look at even the real chart, it's even prettier, and it had a cheat area last week. That was really your buy point in my mind. If you want to look at the underlying, you can do that. But if you're really wide, you trade on the weekly. Yeah, you've got a big.
This is a weekly here. Yeah,
you got a pretty big cup and handle.
Looks great on the weekly. It looks great on the weekly, and it looks pretty good on the daily too.
My point was, this thing doesn't track the ETH as well, and
right.
It's down to that low. Even you're looking at cheapers 20%.
Right, you're not trading the ETF. You're trading
yeah. I'm trading the actual crypto.
Yeah.
But the real point, guys, is it's the timeless principles. Like, it doesn't matter what the asset class is. You could show Mark a chart of, I don't know, baseball card prices or something. They're going to form these patterns when they're under accumulation.
Right. Okay. Kirill's asking a question. Hey, Mark, why were people triggered with the CNBC story? What exactly made them so upset? Well, that's a very good question that I've been trying to ask myself. I don't know. It's a few little words turned everything into a tailspin. So I really don't have any any idea of that, I certainly wouldn't have gotten upset if somebody who had an audio problem on their interview. But that's a good question. But you see, you guys see, I had a response to that, and the response has been just amazing, an unbelievable outpouring of love and support. So from so many people around the world, it's been really, really quite nice. So anyway, that's in the rearview mirror now. Let's see here. I've heard you mention a couple times that it took a few years to develop a decent sized bankroll, and then things really took off from there. I'm just curious, how much do you consider that to be? Well, I mean, that's a completely personal number. For me, I started off with a couple $1,000s and I lost it. And then a couple more thousand that I worked for and I lost it. And then my mother got some money from I forget what she got it from. She got a little windfall and she gave me $4,000 and I put it into an account and I blew that up in options. And probably all in all, I borrowed money on credit cards. My first few credit cards that I got, I borrowed money at 20% interest and I lost half of that. All in all, I was probably down, I don't know, 20,000 or so. And then I actually got hit by a car. And I was riding my bicycle and I got hit by a car and I got a little settlement from it. I got a lawsuit from it. I got like $10,000. I put it into an account, and that's sort of where it all started for me. And then I was a musician at the time, and I had a little recording studio, and I sold my studio, and I took the proceeds from the studio and I added it to my account, and it was $30,338. That was my starting, kind of my real starting capital as far as a decent bankroll, if you will, back in 80 something. And then that's the account that I ran up 36,000% over the subsequent 5 years. A decent size bankroll. I mean, I consider it to be a decent size bankroll when I got to, it was about 150, 160,000. I was like, okay, I got a little bit of capital now. I want to run this up to $500,000. And when I got to $500,000, I felt like, okay, I have a decent bankroll now. And then of course, the $1 million number is the dream of everybody, anybody who's poor, $1 million seems like a lot of money. So when I hit that $1 million mark, that was a big deal too. Because at the time I started off, very poor, where I started from, and had no money or resources. So let me see. Can you? Otherwise, see all the questions that people start chatting. Can you change the chat to panelist? I don't know. I don't know what that means. I'm seeing all the questions. So let's see. Okay. Trox for a swing move. Let's see. Yeah, I mean, this looks pretty good. We have this on buy alert. I like this big move here, and I like right here. What I like is you see how you got all these reversals. So this is something where if you can get through here in reversal recovery, that's a pretty good sign because you seem to have so much supply here. And this is really becoming a formidable level. So I like the way see how that same concept of quieting down and tightening up around the spot at which you see the supply. This is really the key to explosive price action. Now, that doesn't mean that this is going to explode and it's going to work, but this is what you want to look for the potential. It's just that, for lack of a better way to put it, if you wanted to get struck by a moving car, which you wouldn't, of course, it's a horrible metaphor, but or a mental picture. But if you wanted to get hit by a car, if your goal was to get hit by a car, you would go play in heavy traffic, right? That's what you'd put yourself in that position. So what I'm trying to do is put myself in a position to get lucky, to put myself in a position to get struck by lightning, to get struck by a stock that blasts off to the moon. And by constantly doing that in situations and under conditions that have the potential to be explosive, and then manage the risk in relation to that. That's all this is about. It's just about probabilities. It's no different than if you're playing poker and you're going to put yourself in a position to win a big pot by playing the probabilities to cards and then betting accordingly. And as that hand improves, you're going to raise your bet until you push all your chips in, and you're hoping that somebody else is going to have a decent hand that has to call, and you beat them with the better hand. It's no different. It's so much. Matter of fact, when I trained traders in New York, when I was in New York City for all those years, and I was training traders, we started them a lot of times playing poker. I wanted to see, do you even understand how to play poker and make bets, and know when to push in, and to increase your bet based on probabilities. And I felt like if you couldn't understand that, it would be pretty hard for you to understand trading. Let's see. Why wasn't GT good enough for a buy now? Well, it was. I mean, I don't put everything on, and I don't buy everything myself. But I mean, I think it was fine. It was maybe up a little bit by the time it broke out. That's the real reason, is it was up, quite a bit at the time it broke out. But other than that, I mean, it's fine. And it has a super, super tight spread. This is one that I've traded before. Let me see. I don't know what the spread is right now, but it was like a penny before. Is it still? Yeah, it's 1 penny. So it's super tight spread. This is one that I traded in this year, and I took huge positions in because the spread was so tight and the liquidity was so much. Let's see here. How do you go from tiny positions, keeping a pulse on the market type of positions, quickly back up to your normal size positions? Well, I mean, how to, but I'm not being facetious, but how to do that, of course. I guess you're asking, why, or what would make you do that, or what do you need to see, I guess. Mark, I mean, that's a good question for you. Because you've been really kind of riding the break the whole entire year, and keeping your finger on the pulse with these, small positions. And you've actually pumped it up a number of times, but the whack-a-mole game puts you back in the hole a bunch of times. Every time you pop your head up, bang, you get hit on the head and you go back in the hole. So, how do you do that? What has been your, and again, the benefits of that, we know the benefits, but the downside is that you could get the zag zig, where you zig when you should zag and zag when you should zig, and you're whipped back and forth. So how do you do that, and from going from the small size to the big size? And I think the real question is, how do you do that without getting whipped around, and getting beat up with stop losses, or getting it wrong, where you're big when you're big when it's not working, and you're small when it is.
Yeah. Well, sometimes you don't ever want to get big when it's not working. So that's kind of rule number one, is I've been small when it's working. And then you use that feedback, obviously, to quickly, ramp your size up. The challenge the last 6 months, and we've talked about this, but, I know there's new people, has been, the 2 to 3 day feedback that I would often use. So you get a breakout, it holds for 2 or 3 days, and then I'm leaning on those gains to get more aggressive. Well, that's precisely been the time where you want to be taking profits in the last 6 months, because you've only had 2 to 3 day gains. But I know if you do it right, so let's say I can get 100, let's say I step in the market with 2 positions and I'm 25% invested, and I'm taking, say 1% risk. If I lean on gains in those to bump myself up to 75, aggressively, or maybe even 100 over the course of, say, a week, and I still only take 2% total risk because I'm leaning on other gains, that's a net win for me every time. So I would much prefer to take a 2% loss to my account, being 100% invested, but having scaled up properly, than just taking 25% positions and getting stopped out. And that's kind of what we've had. So
that is a golden piece of advice. Okay, for those of you that maybe hopefully understood what Mark was saying, but that is a golden piece of advice, and that's exactly what I would try to do too. Go ahead.
Yeah, the other thing I was just going to add was, no, I lost my train of thought, but I don't usually I'm usually pointing out the golden nuggets. I'm not giving them.
I know. That's when I try to interview somebody. I'm not an interviewer. I'm always getting interviewed. So I think I'm a terrible interviewer, but I try to limp along with it.
I know what I was going to say is the other thing right now is we're not seeing a ton of really crisp setups, So I got a couple things that kind of working. I'm making a little bit of progress, but if there was a lot of other setups specifically in groups I really liked, or in kind of the classic, I always default to those classic growth winners, the biggest winners in history in terms of, Mark talks about this in his book, the consumer retails, the tech names, those biomedical area, leisure entertainment. I've got to memorize because those are the ones I'm looking for. If there was a wave of
Right.
setups, that's where I'm looking to really get aggressive. Well, we've got some financials, we've got some oils, Goodyear tires. You know what I mean? That's not. It
Yeah.
doesn't mean I won't trade them. I'm just not going to get near as excited or as aggressive because you got to dance with the girl you brought to the dance, and those four groups are the girl I'm dancing with.
Yeah, and again, people say, well, this area is working and that's working. Yeah, that's great. And you can also be, you're playing poker and a pair of threes, works, and you fold them and you would have flopped a three, but that doesn't change the probabilities that hand played over 100 times or 1,000 times is going to be a losing hand. So again, we're dealing with probabilities here. We're trying to put all the probabilities into our corner, and part of that is also the type and groups of stocks where we've seen the winners come from, because cyclical stocks are cyclical. They're not secular. They don't make their earnings cycles are short, and so that's why their moves are shorter. There are times where they work, and maybe we're getting inflation, and who knows, maybe this turns out to be a 1970 style theme. I don't know, but
Yeah, and there's always caveats. This is where OLN is kind of is an interesting one, because somebody would go, "I thought you don't like cyclicals." Well, I don't, but it was a 96 relative strength. It does have
yeah.
triple digit earnings, and it happens to make sense to me that everybody I know who shoots guns tells me when I go to the store to buy bullets, they cost a lot more than they used to. So it tells me,
Well, I
you
am
know,
one of those.
well, right, right.
Actually,
You
I was the I saw this coming a mile away. Just real quick to tell you guys know, some of my investments. One of them was ammo. I literally am sitting on $100,000 worth of ammo that I paid $30,000 for, which I wish I bought $100,000 worth of it. But I used to shoot, when I was shooting competition. I would shoot 60,000 rounds a year, which is about 30,000 $30,000 worth of ammo in a year. So it's not actually a lot of ammo for me, but I haven't shot much recently, and I'm having shoot competition recently. But again, the ammo, they call it the great ammo shortage of 2020, I think, and it's been years where you just can't get ammo, and if you do, it's extremely expensive. So you're absolutely right. I know that firsthand. Let's see here. So what is your current position size as pilot? So what's considered a pilot position size, again, is really individual. It's a function of your maximum size, and it's also a function of your risk of total equity. So for me, I mean, a pilot position might be 5 or 10%. A big position would be 25%, and anything over that, 50%, 100% is that super aggressive. My thinking is, okay, if this thing takes off intraday, I'm going to peel some off, finance my risk, and then go overnight with maybe a 25% position or smaller. So for me, that's it. For someone else, it might be much smaller. Your maximum position size might be 10%, and you've allotted a 10 slot portfolio. So now your pilot buy might be 1 or 2%, might be very small. Mark, what is your pilot buy? What would be a pilot buy for you?
Yeah, pilot position to me would be anything maybe 5% or under, just as a normal number. I mean, for me, and some of it's always liquidity sensitive, but I want to get 12 to 15% in a position ideally if things are working well, maybe more. So I might trade even in tranches of five, where I buy five, and another five. But if I'm just I've been trading in some cases 2% positions, just to keep a pulse
Yeah.
in the last couple months.
Yeah, yeah. And again, let me just point this out. If you're not taking an optimal amount of risk and you're not having position sizes of at least 5 or 10%, you're not going to get big performance. Okay. That's what I mean. You might get it like on occasion when everything's moving and you got a rip roaring market, but consistently, no way. You're going to have size on. So that's something that you eventually got to get used to, and placing good. Now, that doesn't mean taking lots of risk. It means putting on big position sizes, but you offset that, of course, by the amount of risk and your timing and so forth, and progressive exposure. INVE on October 7th and MNDY yesterday. Alvin bought, wants to take a look at it if those are decent buys, or comment on the buys. So INVE, let's take a look at that on October 7th. So 10.7. I think that's a pretty good buy. I see exactly what you were doing. You got the little pivot right here, pulling up from or sort of a pullback buy. It looked like obviously it looks like the buy point right here on 9.10 was pretty nice. Came right back. I don't think that would have knocked me out completely, but certainly would have, if on a swing basis, I would have probably reduced. Then it came back up. I think it was fine. I think at this point, you should probably already be out of it, though. Once it came in here and undercut the pivot and then couldn't rally and put in sort of this mini ledge. Certainly when it started breaking down from there, I'm out. I'd probably be out right away, though, because I'm being sort of creative with this. Now I'm going to, I think this is a lower probability because it's got this volatility. It's not that perfect, real perfect setup like I was just showing, like in an LORL, where you really got that nice right side. This right side is a little bit all over the place, so I would put it on a very short leash. So I would already be out of that, but I could see taking that trade to begin with. MNDY, this is one I've been watching for a while, and I wanted to get on board here. I was looking at it. It had a nice big move here. You can see over 100%. So I was looking at this from a power play and thinking that this was going to set up. And now you've come off here. Let's see, about 25%. So it's still, sort of a power play. 20% would be perfect. And I know some of these, they go in, 7 days or even shorter, but a power play, or high tight flag is generally 3 to 6 weeks, at least in the olden days. Let's put it that way. So this could very easily set up here. I'm watching this very carefully for right side. If this could tighten up and they get through these recent reversals from a tight area, no different than the analysis I just talked to you about before. This is a stock that I've been very interested in. On its progressive exposure, do you ever add new position by how individual names are acting, or more art of tape action than by actual math of winning positions, financing the next position for larger progressive exposure? So yeah, so basically, is there a mathematical way we're doing it, or more of a feel? It's definitely more of a feel for me, but I could tell you right now that my feel, if you were to judge my feel, you would probably notice some really good math behind it. It's certainly, my math is not going to be upside down. My feel is going to be good math, because I started with math. I do. So no, I don't. I'm not saying X number of positions and I do this, but I can tell you, if I see, if I have a few names, 2, 3 names that are acting well, that's a good sign, and I might start bumping. But it's also based on, what's my buy alert list look like? What does the market look like? I mean, we're coming off the lows and we have no follow through day. There's not much of a buy alert list, and I bought a couple positions and they're working. That's not really going to give me the confidence to start bumping it up very much. But let's just say, okay, let's just say I don't have any positions and I stayed away, and there's follow through days, and there a whole bunch of stocks are setting up, and they're all breaking out. But I just was, whatever, I was nervous and I just didn't buy them. Well, now that I see a bunch of stocks breaking out, I might ramp up really quick to try to, to get in there, because I see things working and I didn't get involved. So it really depends. It's a sort of a balancing act between all that. How about you, Mark?
Yeah, I think it's exactly what you said in terms of it's more feel than math, but you're going to find the two are very correlated. And this is what I'm still trying to work on, guys. That where good good intuitive feel comes from experience and going through a lot of cycles. And I'm not going to sit there though and go, well, if I'm not up X percent in my first two buys, I'm going to ignore three really good crisp setups that are, are following through, in the wake of those first two. No, I'm going to buy them. So, yeah, I think it's both, but I would lean maybe more toward the art first, but the math is right there with it.
Yeah, yeah. Um, let's see here. I know there's some questions on NUE. I did talk about that. I guess let me just pull it up for a second. So some are asking about overhead supply here and the gap down. Absolutely, there's definitely some supply here. So this isn't this isn't like this super high probability trade. So yeah, and you see it squatting here already. But I'm trying to get into a position where I can go into earnings and get this coming off the low cheat here. This is still, and again, a lot of these cyclicals are acting well. Like I said, Steel Dynamics had earnings; it's acting pretty good. But this is one again that this is why I would say a half position, maybe a quarter position here. Let's see. Okay. There's a bunch of comments here, so I'm just trying to go through the comments and look for questions. Entered HMHC yesterday as it breaks out, and then by the end of the day it squatted, and I got stopped out today. Can you view the trade? So HMHC, and I'm going to bring that up also on a Market Smith chart, HMHC on my other screen. Yeah, I don't. You said you bought this yesterday. Yeah, I'm not sure your rationale for buying. I mean, I see your rationale for buying yesterday, but I don't like it. It really needed to go right here. Right here, I wanted to see this breakout. We had this on buy alert, and it turned down. Then it came below the 50-day. So now, if you see what the pivot is right here, right? Now, as you're setting up here, look at the days. 1, 2, 3, 4. You got 4 out of 1, 2, 3 days down. You got a bunch of bad closes. You're now starting to live below the 50-day. This is starting to get, it's getting elongated here where had some nice symmetry right here and was tightening up. And now it's taking too long. The train's not coming in on schedule. At this point, I don't want to buy into this. I don't want to buy into that. That's where the supply is. I want to see it quiet down into that area and then take that area out. See, that's the concept that I was trying to explain today about getting through the supply and having it quiet down there. Now, of course, if you're in a situation like a NUE, you're buying from a cheat area, then there's supply to the left, and then you have to determine, how steep, the sell-off was on that left. There was a lot of volume there, how recent it is, and it becomes, a little bit more tricky as far as, knowing whether you're getting through the supply or not. But this is the easiest way with something like this. This is really clear cut, where why not wait for it to clear out and get through the supply? Why try to, jump ahead here and cheat? Now you might be saying, well, I'm trading really close to the danger point. If that's the case, then you should be out of it already. Okay. Yeah, let's see here. SCR. It can't be a power play. It didn't come from a period of dormancy, but it doesn't have to come from a period of dormancy to be a power play, but those are the better ones. But let's see what you're looking at. SCR. Okay, I'm not even getting a symbol coming up on that. So I'm not sure if maybe we have the wrong symbol there. I'm sorry. INMD, reverse badly after a pivot. Well, that's just a comment. Okay, ISEE, buyable after this inside day. Question, ISEE. Let's see. So what do you think, Mark? Buyable after this inside day?
That would be aggressive, but
Yeah.
if you look, this has got the power there. This is on my polls list. I'm watching this one.
Yep, I am too. I'm trying to get involved in this. This is one that, is what I would call an extended power play, that it already made a big move. And again, but it had, it was moving sideways and for a long time. If you look at on a weekly, So I'm watching this. It is a bit erratic. So this
If you
would
were
be
gonna,
definitely. Go
this is a
ahead.
good, this is a question almost for you, Mark, too. If I was gonna play an inside day like this, I would want to see it close really well. Meaning, like if this stayed inside and then closed at the top of its range, you could potentially start a position there.
I would
Maybe.
only, yeah, I would only care that it closed well as if it came down and it came down by the lows.
Gotcha.
And that range was a little bit wider and it went inside, but it came down near the lows. I want to see where it got this support here. I want to see it get support again. If it stayed quiet right here in this really tight range, then I wouldn't care even if it closed on the dead low. So that's a little bit of nuance there. So I think what Mark's saying is, absolutely correct. But I would put a little caveat to that, that I've watched the trading inside that range a bit. And that's what I call a tip-off day. When I watch these, a lot of times I'm watching them very carefully. I'm seeing how they trade intraday, not to trade an intraday pattern or watch a 1-minute chart, to watch that one daily bar and to see what happens when that stock comes back down where I saw that nice support there and it had a good update. What happens there? Is it immediately, are they coming in and immediately buying it? Because that's the footprints of an institution. See, here's what happens. An institution, mutual fund or a hedge fund, they make a decision on the stock. They tell their traders, hey, this is what we got to buy. We need 1 million shares of this stock. And, we don't want to, pay up more than X amount. Okay, great. So now they got to go in there and build that position. So now they start buying it. They start running it up. They back off. They're going to back off of that stock. Now it comes back down. They run in there right away and they start buying it again and they'll support it. And that's why that's why the lower lows, that's why we'll watch after the breakout, the 3-4 lower lows, because that's where you should have, if it's under accumulation, those lower lows, 2-3 times of a pullback of a lower low, that's exactly where institutions will come in and they'll start adding to the position. They're not going to chase it up extended either. That's the thing, unless it's something that's just that, sometimes they just run in there and they run them up real fast. But again, that's risky. And the pullbacks are where most of the big guys are buying because they have enormous size to put on. They'll just defeat their own purpose. If they start chasing a stock that's running up on volume, they're gonna run it up more, and it's gonna defeat their purpose. So you'll notice if you go in there now, I had the benefit of advising some of the biggest institutions. At one time, I was advising Soros and some of the biggest institutions in the world. And I went to their trade desks, and I was at Soros Management and right there on the trade desk and watched what they were doing. So this was a real benefit of learning how institutions act and respond. And then again, if you go and you look, you can even look at something like okay, Cathie Wood, for instance. Now she's a completely different style. She's, buying more value and she's always buying on the downside. If you were to go and you look at, and their Cathie Wood, their trades are for everybody to view. I don't know what they call it, but it's an open book kind of system where you can see their trades every day. You can go log on to their site, and I don't know exactly where it is, but you can see the trades. You'll find that she's always buying when the stocks are down and selling when they're up. Okay, so all right, let's see here. Okay, are you still holding the coin you bought several months ago? See, yes, I am. That's actually in a little account that's for my daughter. And like it's not a lot of money. It's relative to my my money, my net worth, and my trading account. It's microscopic. But yeah, I own it, and I'm up pretty good on it. And I own Bitcoin too. And I'm just sort of putting that away, and it's kind of an all or nothing bet there. Please correct me if I heard you wrong, but I thought I heard you say that you don't set targets when you buy a stock. How about potential resistance levels above a buy point? Can we set that as a target and measure that against our stops? You can do whatever you want. It's your trading account. But do I set a target and say, when I buy it, I'm going to sell here? Absolutely not. I never do that ever. I mean, I have an idea. If I were to scalp something and just say I go in there and I'm scalping a trade real quick, I might have an idea in my head that, I just bought 10,000 shares. If this thing goes up 2 points and I make 20 grand, I'm probably out. but let's just say it shoots up and it just takes right off and I'm up 30 grand right away. I might say, okay, you know what, this is acting great. I'm going to backstop it a little bit and just stick with it. So you see, it can't just say a black and white answer, because there isn't a black and white answer. The only black and white answer that I have is my stops. Like when I set a stop, that's it. I'm out unless some conditions change and I want to alter that. But that's my plan, and that's the line in the sand. Everything else, is really and buy points. I'm looking at, once I look at a chart and I say this is the pivot buy point, that's the absolute number, and it's not, there's no vacillating or the decision making is very quick and pure there. Let's see, but even, I said intraday, but it could be anything. Let's just say, you bought a position and you said, this thing's up 10%. Same thing. You bought X amount and 10% represents a $5,000 profit. And in your mind, you're like, if I made $5,000 from this, I'd be out. I would be happy with that. And I only took $1,000 risk. That's a 5X, a 5R trade. But now it blows through there. It takes off in the morning. It runs up. It gaps through there. And it's acting great for whatever reason. News comes out. I don't know. And now you might change your decision there and say, okay, I'm going to backstop it now. I'm going to backstop it at that 10% or $5,000 that I was going to be happy with, but now it's up 6,000. So I'll use that $1,000 as a backstop. This is what you have to, you have to learn to do. So, is LC breakout from a small pivot today playable? Is it a power play? So, okay, I don't know. So bend rules a little. I don't like bend rules. I don't like that at all. That's, you bend rules a little, you end up bending rules a lot. Just keep that in mind. You don't want to bend any rules unless, there are times where you're going to be more forgiving and times where you're going to be less forgiving. It's not bending the rules. That's within the rules. So just remember that you're bending the rules should be rules. So this is under the conditions that I bend, and this is how far I bend. Otherwise, believe me, you'll keep bending and you'll keep breaking the rules. And before you know it, you won't have any rules. So breakout from a pivot today. To me, this is extended. The breakout was right here on 1013. Now you've run up and you're turning up from the first. It's a 2-day natural reaction. So this is an extended stock. It's extended about, 14%. So no, I would not chase this up, but I mean, you can certainly play it. There's times where I play stocks from a pullback from a natural reaction, and as it recovers from the natural reaction. But again, I would hope to get in here from the base. That's where I really want to get into it. I'm gonna do a little bit more here, and then I gotta go. I know there's a lot more questions, but there's no way I'm gonna get to them. Put on a position on VRS today with a stop at 2059. VRS. Let's take a look at that. Yeah, I can see what you're doing here. It looks pretty sensible. I like it, of course, right here. This was a nice little pivot, came out real strong. Then you said a little, you want to call it maybe a cap. Let's see, 5, 10, 15. Yeah, this would be a good example probably of a cap. Although it did run up quite a bit and it's a little bit deep, but this is a little cap pattern. Now you've got a little cheat area. So I think it's a great eye. And your stop is at 2059, you said. Let's see, that's down here. Yeah, so using the low here. Yeah, I think that's fine. It looks good. With progressive exposure, do you wait for open profits to find this is, I'm seeing already where this is going. This is a very, very popular question that we get all the time. And I think it needs to be answered over and over. Do you wait for open profits to finance next trades, or want to nail down at least one or two? Example, average gain is 10%. You have 25% exposure with two positions at around 4 to 6% gain. Mark, what do you think with that?
Normally, yeah, I would say I would not wait to nail them down. So I would lean on the open profits. But the caveat then is, okay, let's say you put on two positions at 25% exposure and you're up 5% on average on both. And I buy two more names and bump it, say, to 50. If I'm not willing to get stopped out on all four names, meaning the risk there to my account is too high, then I have to take that into account. Where people get in trouble where they don't nail one down is then they just buy and buy and buy. But then if they have to jockey the other way, you may have to either tighten a stop or take tighter stops on maybe your new buy or something along those lines to make sure that you don't just go piling in there, get yourself 100% long and then
not know
clobbered
your
on.
total downside. if
Not
everything's
know your
going
total
against you.
downside, then you get clobbered. Right.
Another absolute golden nugget. Mark, you're on a roll today. So excellent point. So, and this is exactly what people do. They go through the door and forget about if they got to come back. They go out the exit, or in the entrance, and then forget about if they got to all of a sudden go out the exit, and everybody's going to have to run through the exit at the same time. So you go through you enter one at a time. You go stock, buy, and you enter 4 or 5 names, and then all of a sudden everything turns against you, and everybody's got to run out the door at the same time. This is exactly what Ralph Koppel found when I did some private sessions with Ralph Koppel, and we analyzed everything, and he was having trouble. And I said, your give backs, we got to look at your give backs, because he was giving back a lot of his profits, and he would ramp himself up, and then everything would come in, and then he'd give a whole bunch of it back, when in fact, at one point he had good profits, but he wasn't accounting for the total drawdown and then managing that risk once he got into that situation where now he's got the risk of a big drawdown if every thing turns against him. It's similar to if you ever played craps in a casino. You see guys that go out there and they'll go out and they'll put some money on the pass line, they roll, they win, they buy a few numbers, they're playing the 6 and the 8, roll, and they keep pressing their bets. They press until they got money all over the table. They got hard ways bets, field bets. They got numbers. I mean, they're all over the place. They bought bought the 10, and they're getting 2 to 1 on that one. And I mean, just there's bets everywhere. And yet, as you're rolling and you're making money, you're hitting everything, but then you 7 out and you lose all the bets. So it's the same exact thing. You've got to realize what that risk is, and you have to manage the risk at all times. The key is to remember is that risk is managed in real time. You have to manage, and it has to be managed. You have to think of every move you make as a risk reward decision. Every next play is a new risk reward decision. So if the stock goes, if your stock's up and you're up 20%, you might think to yourself, okay, well, I've got 20% to risk to go back to break even. That's true. But if you're thinking that you're going to sell, if you knew that you were going to sell 10% higher, well, then you just inverted your risk reward ratio. Now you're risking 20 to make 10 from that point forward. This is something that I go over in huge amounts of, for those of you that have gone to the Master Trader program, that I cover this in depth. This is in the risk management section, which is gigantic. And it's an amazing learning experience. So we'll go over this in a couple of weeks at the Master Trader program, of course. But great point, Mark. All right, I have to move on here, and let me just look at the last few, and then we got to go. Let's see. Just go. Okay, I bought DEN 1810 with a stop at day's low, keeping risk tight. I was just stopped out today. But today I might come. No, not stopped out today. I was just stopped out, but today I might come back into my original buy point. Would you buy this again? DEN. Let me see. So would I buy it again here? No, I wouldn't. Not right here. No, not on the first. As it came back in, you get that first rally back. I would either, probably held it, or if I was going to want to buy it back here, I would have probably just held it. But no, this really hasn't done anything massively wrong just yet. If it can hold up here and then within a day or two start to recover and stay inside, then it's fine. If it comes off much from here, that's not a great sign. And every bit down from here gets more and more ominous in my opinion. But it still doesn't look like it's too abnormal. So this is a great question for you, Mark. How do you handle crypto that has so much volatility? Do you allow for very big stops?
No. Well, hold on. Generally, no. So Mark made a point too about, and we could do a separate thing on this, but
if I showed you every place I've bought Bitcoin over the past, I don't know, and I've been watching that market for years. It would look just like what we're teaching in here. Low risk VCP type entry points. So given the volatility, you either have to trade it a little smaller, and then keep in mind, it's 24,365. So I've had a few, I don't do a lot of trading in it, but when they set up, listen, if you show me a perfect, VCP, I'm going to try and trade it. I'm a trader, and that's exactly kind of how I found it. It was like, wow, look at these chart patterns,
See, I do just the opposite. I do the exact opposite. When I have a lot of volatility, my stops are super tight. And there's a section in my book all about this. Take a look at my book. In the first book in particular, there's a section where I talk about, when volatility increases, how to respond. You want your stops to be tighter. You want your positions to be smaller. I respond to volatility by tightening my stops and cutting the volatility off on the downside. This is the exact opposite of what almost everybody does. Oh, more volatility, I need to give it more room. Yeah, that's great when it works. When it doesn't work and you get into a period where you start getting whipped around or everything fails on you, you take a giant loss because now you've got big stops. That's assuming the best. And again, this is what, a lot of people make this argument with ATR. ATR, I mean, there are some people that use ATR judiciously. It's a very, very dangerous tool. If you don't really know what you're doing with it and know how to use it, like I said, judiciously, it'll blow you up. I think ATR is the worst possible way you can ever approach stock trading.
I wasn't, for the record, I wasn't saying take wider stops. I was saying I
No.
take smaller positions because you have some liquidity and execution risk in crypto. But yeah, I absolutely agree. Don't go wider.
No, you've got to account for the volatility. The volatility means that you're going to get stopped out more and you're going to take bigger losses. You have to actually adjust for that. Adjusting and taking more risk for a risky situation is completely backwards. It's completely backwards. Okay, let's see here. I'm going to answer one more question, and then I know. It's so funny how people key-in on my every single word. There's a whole bunch of people saying, please don't retire. I'm not retiring. Relax. I'm not retiring. Although, like I said, my wife has really been pressing very hard. But I'm not retiring soon. But I will probably be retiring in the not so distant future, but not in the immediate future. But I'm not going to be doing this forever. That's for certain. All right. Let's see. Take a look at some of these questions here. Okay, so is the RS important for cryptos on the spot market where you do not have any RS number on IBD? How would you measure the RS? Well, you see, the RS, when you talk about the IBD number, is measuring stocks against all the other stocks. It's not measuring the stock against an index like the RS line in IBD is measuring against the S&P 500. So when the RS line is moving up, the stock's outperforming the S&P, down, it's underperforming. The RS number is based on ranking all the stocks against each other and then putting them from a 99 to a 1 ranking. I'll give you an example how you can do this without IBD in a kind of a crude fashion, but you can just do a rate of change. If you did a 12-month rate of change and then you sorted them from highest number to lowest, you would essentially get an RS ranking from 99 down. And and if you just took all those stocks and divided them into 100 groups, so you would take the top 1%, 2%, 3%. That would be whether how many names it was. It might be 30 names in each percent. That would give you your 99, 98, if you will. So anyway, as far as the question is though, yeah, I'm not looking at the RS number when I'm looking at these indexes and trading something like that. How about you, Mark?
Yeah, similar.
Yeah. Okay, so I tried to give you a little extra here, and as far as in a session this week, and and talk about some of these trades and give you my rationale behind them. And Mark shares some of his wisdom, which I thought was really, really great today. So hopefully this has been helpful. We'll have this for a replay if you want to watch it again, and certainly if whoever hasn't watched it can watch it for the first time. And then we'll monitor the platform. And just real quick, the market is still, it's acting okay as far as the stocks are concerned. Indexes could, like I said, could be leading you to make decisions that you shouldn't be making. So be careful that you don't let these indexes running up influence you into breaking rules and forcing trades. Just wait for the stock setups, make those good risk reward entries, and manage the position really in a vacuum, and get away from being too influenced by these averages. That's my best advice for you. Okay. All right. Talk to you guys later. Bye bye. Thanks, Mark.
Take care, everybody.